Kenya's private sector has received a major boost with new data showing a sharp rise in monthly lending flows. But even as credit conditions ease, overall growth remains sluggish after years of tight lending. Sylvia Kadhoni reports.
Monthly credit flows to the private sector jumped to 10.7 billion shillings in June 2025, up from 2.5 billion shillings in the same month last year. This marks a turnaround for businesses that had been starved for credit for nearly 5 years. The surge follows the Central Bank of Kenya's decision in February to cut the cash reserve ratio from 4.25% to 3.25%, releasing about 73.7 billion shillings to boost lending and lower borrowing costs. Despite the rebound in June, annual private sector credit growth slowed to 2.2%, down from 4% last year. The slowdown hit sectors like finance and insurance, imports, mining, business services and private households, which rely heavily on foreign currency loans. A CBK survey shows 87% of commercial banks reported improved liquidity in the last quarter, driven by increased customer deposits and loan recoveries. Banks now plan to channel much of this cash into private sector lending and interbank markets. With banks now holding more cash and businesses eager to borrow, lending could continue to rise in the coming months. But with the overall growth still subdued, the full recovery of the private sector could depend on whether this momentum is sustained. Sylvia Kadhoni, NTV Business, Nairobi.